Welcome to the Lend Academy podcast, episode number 237. This is your host, Peter Renton, founder of Lend Academy and co-founder of the Lend It Fintech Conference. Today's episode is sponsored by Lend It Fintech USA, the world's largest fintech event dedicated to lending and digital banking. It's happening on May 13th and 14th at the Javits Center in New York City. Lending and banking are converging, and Lend It Fintech immerses you in the most important trends of the day. Meet the people who matter, learn from the experts, and get business done. Lend It Fintech. Lending and banking connected. Go to lendit.com/USA to register. Today on the show, I'm delighted to welcome back Scott Sanborn. He is the CEO of LendingClub, a company that I'm sure pretty much every listener knows quite well. But they've been in the news a lot lately with their acquisition of Radius Bank. And so I wanted to get Scott back on the show to go in depth about this acquisition, why they went and did it, how it all came together, some of the background to it. We talk about all the different products that Radius Bank offers and how that's going to fit in with LendingClub going forward, talking about some of the banking offerings, the banking as a service pieces. We talk about Scott's vision for what this new marketplace bank will look like, and that was super interesting. And we talk about the timeline they've set forward, and finally, how the industry really should think about LendingClub going forward. It was a fascinating interview. I hope you enjoy the show. Welcome back to the podcast, Scott.
Thanks, Peter. Good to be here.
Likewise. Let's just, before we get to the big news, which we're going to devote most of this podcast to, I want to just maybe take a step back and give the listeners a little bit of update on on the core parts of your business. How's that been going?
Yeah, so core business is doing great. We're executing very well against the plan we laid out at our Investor Day back in December of 2017. We've regained market leadership and actually gained share throughout last year, put ourselves, most importantly, on the path to sustainable profit in Q4. We achieved GAAP profitability, just barely, but an important milestone nonetheless, and the first time we've hit that since I became CEO, and a very important prerequisite to becoming a bank. And we also achieved record customer satisfaction last year and are building a really important foundation for a lasting relationship and a lifetime relationship with the customer that our recent announcement fits perfectly into.
Right. Okay. So we're recording this. It's February 25th today. It's a week since you made the big news. I'm curious, before we dig into it, what's been the mood like inside the company over the last week?
It's been electric. People are extremely excited about the future we're building, and to have this, we've obviously been public since after our Q1 earnings of last year about our intentions. And so It's now real. And especially the product and technology and marketing folks are really, really looking forward to digging in on a new front, that we can innovate on behalf of the customers on. We after every earnings call, I do a Ask God Anything session, which is kind of an open mic forum where people can ask questions, and let's just say it was a packed house. We went over time because people were really enthusiastic, and everybody, of course, is eager to know how they can help and when we can get started.
Right. I'm sure it's good to be back on offense again and in a big way. So that's great. So then let's just maybe start with, why did you decide to do an acquisition, let alone not just Radius Bank, but why did you choose to do an acquisition instead of pursuing a charter yourself?
Yeah, so as you know, there's two paths here. One is a de novo application. The other is through acquisition. And, we had always preferred the acquisition path because it de-risks execution and it accelerates your accretion, right? And so what I mean by that, de-risking execution, you can imagine with the regulators, we clearly have a lot of experience on the lending side of the house, right? We've been doing this first loan since 2007. We're doing it at scale with over 55 billion in loans issued lifetime to date. But we don't have experience on the deposit side of the house. So, and we don't have the systems, the processes, the people to manage that. And that makes, kind of validating for regulators that you're going to be a responsible steward of those capabilities more challenging, right? As you know, there's only one fintech that's made it through that process, and it's been 3.5 years. So we view this as really significantly accelerating the path and de-risking the path. And the other piece about acceleration is it's earnings acceleration, right? Because by acquiring a bank, you're acquiring a book of deposits, right? In the case of Radius, over $1 billion in deposits, and you're acquiring a book of loans that are already earning net interest income. So that helps, I won't make you an expert on bank accounting, but as you know, as you build a loan portfolio, especially under CECL, you need to take all of the loss reserves up front, right? So that the gap financial picture early years is a little more challenging. And when you do an acquisition path, you're much more quickly accretive. So that had always been our goal. We were but finding the right partner is the challenge. There's more than 6,000 banks in the U.S.
Right.
And you got both practical and strategic considerations. Practically, somebody we can afford to buy that's for sale, that's willing to sell to a non-regulated institution, which bears thinking about, right? Because there's more risk in the transaction there for them, and certainly timeline at the very least. And isn't bringing a legacy infrastructure to the table. And then there's the strategic side, right? Is there a cultural fit here, and do they have the online deposit taking capabilities versus some kind of a branch infrastructure that obviously wouldn't fit.
Right.
So, finding the right partner was critical.
Right. So then when did you actually first start talking to Radius Bank about this?
Yeah, actually over the summer, late summer, we started talking to them, and the initial call was really about a partnership. We were evaluating partners. It's always been part of our vision to, add a transaction account for our customers. And, prior to having a charter, we were looking at ways of developing one in partnership. And so our first conversation with them was to explore that idea. And CEO was on the phone, I was on the phone, and, I would say 5 minutes into the conversation, after they gave the intro to their company, we gave the intro to our company. We both clearly had a, wow, should we be talking about something deeper here? Because It was so clear that we had separately built at scale the two sides of a bank balance sheet, right? And we had built deposits at scale, and they had built online deposit taking at scale. And putting those two things together is 1 + 1 = 3.
Right. So it's fair to say that you really, and obviously there are not many countries, I wouldn't say there wouldn't be any banks quite like Radius Bank in this country. And I had Mike Butler on my show just a couple of months ago, and I've really been impressed by what they've been able to produce. So suffice to say, you took off the table then this sort of going to buy like a one branch community bank. It would have been a lot cheaper to go and buy a one branch bank to get a banking license in some small town in the middle of America. But it sounds like you took that off the table pretty quickly.
Yeah, it goes back to that question of what are we looking for, right? We're looking for somebody who's got the ability to take online deposits at scale, and who would be excited about being part of LendingClub and building a major brand and business. And that's what Radius brought. Under Mike's leadership, they several years ago went through the process of closing down their branches and investing in their online capabilities. And that's been where all their focus has been, just like all our focus has been on, building out our lending capabilities.
Sure. So, but when you look at Radius's business, though, they obviously have a much broader kind of product suite than what From what you've just talked about, I mean, they have this sort of banking as a service part of their business. I know that they've got NerdWallet. They're doing, I think, savings accounts for NerdWallet. They're doing bank accounts for Brex, and these are sort of pretty unrelated type offerings to what LendingClub has today. I mean, was this? How do you feel about that kind of part of their business? Is this something you want to adopt and grow, or not?
Yeah, so we are very excited about what they've built on the partnership side of their business. It's they're bringing over $1 billion in deposits, and just like in lending, having a diversified portfolio is important. Same thing's true in deposits. So these partnerships are an important part of their diversified deposit portfolio. And once we get through the nuts and bolts of the integration, we think provide a real exciting potential for future growth, and the ability for us to potentially provide some other services to those partners.
Okay. And then what about
Peter? That's why we're being. Whenever we talk about this, we say, we're going to be a marketplace bank, right? And This is all part of that, which really to just differentiate us from what people think of as the traditional banking model.
Right. So maybe just expand on that a little bit. So when you say a marketplace bank, do you mean like obviously you've got the marketplace lending operation, which I think everyone gets, but do you mean having a marketplace like Radius Bank has a marketplace where the products that they don't offer directly, they have referral type programs? I mean, maybe you could just spend a minute just teasing out your vision of what the marketplace bank actually will look like.
Yeah, so there's a couple aspects to it. One is, again, on the lending side of the house, we believe the marketplace model has some really critical strategic advantages for the customer and by extension for the company, which is, we're able to serve a very broad range of customers, right? That goes beyond what a traditional bank would do by virtue of the fact that, there's a segment of customers that don't comfortably sit on a typical bank balance sheet due to their risk profile, but there are plenty of buyers for that asset. And so by being able to cover both high quality, let's call it, traditional bank customers, as well as, still credit worthy, but higher risk customer segments, that enables us to say yes to more, makes our marketing much more efficient, and really kind of drives the overall business model. So that's on the lending side. The other concept of the marketplace on the lending side is we don't need to build every product ourselves. Mm-hmm. We will have a customer relationship, which will soon be enhanced by not only being able to extend credit in the form of unsecured lending or auto refinance, but also the ability to offer them a transaction and or savings account. So we've got that. Then we'll have significant data on our customers. We'll understand their cash flow, we'll understand their credit history, and we'll understand their behavioral patterns. And can we identify other opportunities for these customers to save, regardless of whether or not we manufacture those products, mm-hmm. right? So if I see rates have gone down and I know somebody refinanced 2 years ago when rates were higher, well, shouldn't I prompt them that they can save off of their mortgage? And can I, with their permission, provide them a pre-approved offer from a partner who we know will deliver on the experience? So that's all part of the vision for us of a marketplace bank is, investing in areas that are strategic for us to really own the experience, but then integrating and partnering with others to add value to the customer and not feel like we need to build it all ourselves.
Mm-hmm. It reminds me actually of your Lend It keynote, your first keynote as CEO back in 2017, where I still remember this distinctly, where you sort of teased sort of the audience about becoming sort of the Amazon. I think you used the Amazon analogy directly, saying the Amazon of financial services. I mean, is that really what sounds like that's what you're talking about here?
It is, and we are making progress towards that vision. As you know, last year we integrated with several partners on the small business side to do just this, right? Which is we're working with Opportunity Fund and Funding Circle to enable customers who are coming to us organically, right? Just because they know the brand and potentially have experienced the brand as a consumer, but also might have just heard of us through, you or other places in the media or word of mouth. And we are enabling them to get connected to, credit at a, fair and transparent process. And these aren't it's not a product that we're manufacturing. So we're already building towards that vision.
Right. And then what about the products that Radius is manufacturing? Like when I talked with Mike, he mentioned, equipment finance, SBA loans. Would you continue those kinds of products as in having them manufacture in-house?
Yeah, as I mentioned before, kind of having a diverse portfolio in lending is a good thing. And them bringing a portfolio of loans, while at a significantly smaller scale, obviously, than what LendingClub is producing, is part of what enables this deal to pay for itself within 2 years. Certain of those portfolios we think we can even turbocharge. For example, the SBA loans make perfect sense as part of our current portfolio, where people are coming to us looking for small business loans and we're working with partners. The SBA product would be something that we could click right into that. Right.
Yep, that makes sense. So then, if we fast forward, you said 12 to 15 months, you said on the earnings call, and, if we fast forward 15 months, when this is all said and done, what are you most excited about offering? What can we expect to see, first, as you kind of integrate? What new products?
Yeah, so the number one thing we are really excited to get to work on is a uniquely LendingClub checking account, transaction account for the customers. Right now, as you know, we help people pay less when they're borrowing money. What we want to do is help them earn more when saving, and really create an integrated experience that goes after, some of the fundamentally broken things in the current banking experience, right? For example, a significant percentage of LendingClub customers today get hit with overdraft fees, and the average customer that gets hit with an overdraft fee actually gets hit with it 3 or 4 times in a year. I think you know how those things work. They're not considered loans. If they were, they would be at usurious interest rates. You're paying, you write a $30 check and you pay a $35 overdraft fee. We look at that and say, well, can't we use the tools available to us today, both a combination of artificial intelligence to do some predictive modeling on behalf of consumers to say, hey, you've got some bills coming up, your account's getting low, you got to be thoughtful about the payments that are due at this time. And if the customer doesn't have a choice, extending fair and reasonable credit seamlessly as part of the actual integrated account experience for them. So that's something we are super excited to go after. It really gives us a reason to have a mobile experience, to have an experience that's high engagement. Our customers want this from us. We did a survey of our customer base, and 90% of them said that they would consider a LendingClub account, and 36% of them said, I'd just do it. And, I think, we rolled out late last year in beta a credit health tool for customers, and we're seeing really high adoption of that as well. People are saying they trust LendingClub, we've helped them save money, and this idea that we can, kind of have a product and have a business where the interests of the customer are aligned with the interests of the company. And when we win, they win is something that is super exciting for everybody here.
Interesting. So that's another question I was going to ask about the financial health piece. So I know you've been pushing that message for some time now. And so it sounds like what you're saying is that the new products that you launch as a result of this, of this merger, you're going to have new, financial health is going to be sort of is that going to be the backbone of the thing that ties it all together? I take it. I mean, is that how you're thinking about it?
Yeah, that's right. We're going to make this a really integrated experience, and you can think about a couple things we've been talking about for a while all coming together. One is, really investing in this idea of club membership, that once you've come to us the first time and, we have underwritten you and you've successfully paid off a loan, how do we make any subsequent experience you have with us in lending really, really seamless? So last year we got to a one-click offer for you when you come back. So no need to fill out another application and, have us treat you like a stranger. We treat you like, a member of the club. This year we're going to get to a one-click loan. By using the data that we have to enable really, really, our goal is to make it as easy to get an unsecured personal loan as it is to swipe your credit card. But obviously, to be giving you a superior product at a lower fixed rate versus a card. So that'll be one aspect of it. The second is continuing to invest in this credit health tool that helps people understand where they are and how the actions they're taking are actually most directly affecting their eligibility and their cost of credit. It's something we internally call do this, get that. Mm-hmm. So we're building this experience where we're tracking all your cards, we're tracking your credit, and we can tell you, hey, the problem is your utilization's getting high because you're putting it all on this one card. You either need to raise the limit on that card or, spread it out amongst your cards. Those kinds of things that will help you manage your credit, specifically your cost of credit and your eligibility. And then the third is going to be a new tool available to us, which is being able to help you manage your cash flow and actually manage your spending so that we can help you save more in your checking and savings account. Mm-hmm. That'll be the new front. And so the goal is to have all of these three, upon approval, come together into a really unified experience.
So does that mean you would offer a LendingClub credit card at some point?
I don't see that on the near-term horizon. I do think there is a way to offer a credit card that is on brand for LendingClub, right? Where you are being rewarded for your good behavior. But, that is not something we're focused on near term right now. Our near-term focus is these kind of three pillars that I just talked about, and obviously bank readiness, just making sure we are ready to really hit the ground running, so that post-approval we have the ability to issue our own loans, gather our own deposits, deploy a subset of those deposits into loans, and really take the customer experience to the next level.
Right. Okay, so I read recently you crossed, I think, 3 million borrowers now, so you've got a very large customer base there. But I actually want to talk about the individual investor who, obviously, the numbers are much less than that. But obviously, I'm one of those. I've been an individual investor now for coming up on, it's going to be 11 years pretty soon. But
thank you, Peter.
You're welcome. So what are the future plans for that sort of subset of the LendingClub membership, shall we say?
Yeah, I mean, we view kind of the retail investor as sort of the pinnacle of a successful journey for the customer, right? If you come to us to get savings off of your cost of debt, you open a LendingClub checking account, we help you actually generate real savings in the form of your own kind of cushion so that you don't need to turn to debt if there's an interruption in your cash flow or an unexpected expense. And then from there, the ability to pay it forward and, support other American consumers who, were where you were however many years ago, and also earn a compelling return. So we think as part of our overall arc of the customer journey, the retail investor is an important part of it. We look forward to being able to evolve that experience under the bank charter frame. I mean, I think you can imagine a world where you've got a LendingClub retail investor account and it's linked to a card, and you could set up how much you want to invest, how much you want to keep in cash, and you have the ability to use that at ATMs. That would be an example of something that we could do in the future.
Right. So from what you're saying, I mean, obviously, you look at your filings, and the self-managed individual investor is becoming a smaller percentage as you grow, but it sounds like you're still committed to maintaining and potentially improving the offerings there.
Yes, this will give us new opportunities to do that.
Right. Yeah. Okay. I look forward to that. Okay. So then, you've got this timeline that you've laid out there. I'm curious about what are some of the near-term targets that you are looking to hit to make sure that you maintain. Obviously, you've been talking to the regulators, I imagine, for a long time. But what are some of the things that are coming up on that timeline?
Yeah. So correct. We've been engaged with the regulators for more than a year now, and the important thing is we now feel like we're at a place where we're ready for this next phase. If you go back a year, one of the, as I shared with you, the question was, okay, does LendingClub know how to manage credit? Check. Is LendingClub profitable? That was an X a year ago. We're now profitable. That's a check. So one of the things we need to do now is maintain profitability. That'll be a key thing, and that's a core focus of us this year is maintaining that. Next is, does LendingClub know how to manage deposits? Now with the acquisition of Radius, the answer to that is again a check. And so the process we need to go through now is essentially, get regulatory feedback on all of our, across the board, people, processes, tools, systems, our business plan, all of those, process that feedback from the regulators, revise, and remediate anything that they've identified on our behalf, and incorporate that, and then eventually submit a formal and that'll be a public application that will come later in the process. And that submission of the formal application will be something that will indicate that we're kind of through the process of remediation.
Mm-hmm. But I guess imagine it's fair to say that you had conversations with the regulators before you came and you made this public announcement. So I mean, what were those conversations like?
The conversations have been incredibly constructive, really constructive. And, we're trying to do something that hasn't been done before. It's not every day that a company doing $12 billion in loans acquires a directly supervised institution. So, the conversations have been, okay, what do we need to do to, essentially get the regulators comfortable with the frameworks that we have in place, and how do we need to, ready ourselves for the process we're about to go through. But they've been very constructive and very frequent. And, we're feeling, a high degree of engagement on the part of the regulators, and we're looking forward to working with them collaboratively as we go through this process.
Right. And it is good. I was listening to a podcast on the weekend with Joanne Barefoot. She had Yelena McWilliams on, the head of the FDIC. And, I just was struck by how much she wants to promote innovation and new ways of doing things, and sort of doing away with a lot of the sacred cows at the FDIC that I feel when I was reading that, when I was listening to that and thinking about what you guys are doing, I feel optimistic that, and I imagine you do too, about the fact that the regulators are not throwing up, hurdles against you. I know that Varo obviously had a really, really long time before they were able to get complete approval there. But I imagine, even the OCC, obviously they tried with the FinTech charter, that didn't, that's sort of in limbo now. But you can maybe give us your sense too, that the regulators really want to say yes, whereas before I feel like they wanted to say no.
I think there is a recognition that, there is a lot of benefit that a company like LendingClub brings to the system, right? We've been demonstrated in some studies by the Federal Reserve that we're making credit more affordable, we're making credit more accessible. We've reached a scale at which, it makes sense for us to be directly supervised, and As a result of that scale and the unique aspect of our model in which we're partnering with so many banks, we've built so much of the systems and processes, and I've hired so many of the people that you would expect to see in a bank that it just makes sense. And I think that desire, you're not only hearing the top where the tone is being set, but we feel that throughout the whole organization. That said, it is an awesome responsibility that, comes with a bank charter. So, real work needs to be done to validate that an organization is prepared for the responsibility that, they're about to be granted. So there is real work that needs to be done. And not everyone is going to be ready. I look to, I think we are really uniquely positioned given, the length of time we've been in business, the scale we're operating, and, the nature of our banking relationships that has required us to build out these capabilities. I think when you look in other markets, there's certainly some interesting models. You've probably seen what Singapore did with, these bank charters that they have levels of charter that they grant. And they're trying to make it possible for new entrants to come in and gradually move up in terms of the capabilities they get and also the leeway they have to operate. I think, there's some interesting models there. I think lacking that, for most companies, it is a difficult path to get down. And, there are only a few companies, I think, that really are ready to do that. And I do believe we're one of them.
Sure. Okay, we're just about out of time, but one question before I let you go. And when we look at LendingClub's position in the industry, and you've had a leadership position and a very clearly defined leadership position for for many years, but this kind of this move is something that is going to reposition yourself. And maybe you can share with the audience how the fintech industry should really think about LendingClub going forward.
Yeah, I mean, we will continue to stand apart. We're going to have a new peer set that we're amongst, but we're not going to, we're not going to look like they do, right? We're going to be faster growing, high margin, and again, have a business model in which, the success of the company is really aligned with the success of the customer. And we're looking forward to bringing that same, innovation and customer-centric product development to the deposit, checking, and transaction side of the house that we brought to the lending side of the house.
Okay, well, we'll have to leave it there. Good luck with everything, Scott. I'm sure it's going to be a fascinating journey over the next 12 to 15 months, and we'll be all paying attention. But thanks for coming on the show, and best of luck.
All right. Thanks, Peter. Watch this space.
Indeed. Okay, see ya. I have to admit, when I first heard the rumors that LendingClub was acquiring a bank, I didn't immediately think of Radius Bank. I clearly should have, because I feel like they really are a great fit. And, I'm excited for LendingClub and what it means, I think, for fintech. This is the first of its kind, having someone who's really become an established lender, in fact, the largest personal loan lender in the country. Going down that route before becoming a bank has never been done before, and it's going to be super interesting to see how it all plays out. I think this is not going to be the last of this kind of acquisition that we'll see in this industry, but I think everyone is going to be watching closely to see how the acquisition goes, how the regulatory approvals go, and what comes out of it. And as Scott said, it's there's really it's an exciting time. There's a lot of things that they can do with this. Anyway, on that note, before I sign off, you will be able to hear more about this at Lend It Fintech USA, where Scott Sanborn will be a keynote speaker on our opening morning. Anyway, thank you very much for listening, and I'll catch you next time. Bye. Today's episode was sponsored by Lend It Fintech USA, the world's largest fintech event dedicated to lending and digital banking. It's happening on May 13th and 14th at the Javits Center in New York City. Lending and banking are converging, and Lend It Fintech immerses you in the most important trends of the day. Meet the people who matter, learn from the experts, and get business done. Lend It Fintech. Lending and banking connected. Go to lendit.com/USA to register.